Recording and 5, 4, 3, 2, 1. Good afternoon and welcome back, Quasar Markets Live. I am joined by Dr. Alan Ellman, the president of the Blue Collar Investing Corp. Always great to have you here, Dr. Ellman. How is your day going?
Morning, Howard. Everything is great down here in sunny Florida.
Yeah, I knew you were going to rub that in on me as soon as we got live on the air here. I'm sitting in a foot of snow. You got a short sleeve shirt on there. Looks like you're getting ready to maybe go play a round of golf this afternoon. I'm very jealous.
Actually, it's down in the 50s here, which is very chilly for southern Florida, but we can handle it.
Well, one of the things I wanted to do as we were starting the new year, we're up to our 11th interview with you. Thank you so much for spending time with us on a weekly basis. I wanted to go back and talk a little bit about how you got your start, why you did it, how people get in touch with the blue collar investor, how they find you online, and a little bit about what your BCI strategy, as we call it, sort of entails. And then I got to tell you something I haven't told you yet. I'm going to start to incorporate your covered call, and I've been trying to use it, and I think I'm going to use it on the Bitcoin options or on IBIT. I'm going to buy IBIT, which is the ETF on Bitcoin, and use a covered call strategy, and then use my proceeds in my 401k. I'm going to do this all in a tax deferred method that you've talked about a lot with me here, and I am going to start using it on Bitcoin. So I hadn't told you that. I thought I'd surprise you with that one, but I love what you've been teaching me and teaching us here at Quasar, and a little different than in your technique. I am attached to the underlying equity in this time at this point with Bitcoin, but I just think that selling a premium on it and using that either as income, or in this case, I'm actually going to use it to buy spot Bitcoin in my self-directed IRA. So it's going to be interesting to see. This is going to be my first foray into the world of covered calls in this manner.
But when we're done with the call, I may have a couple tips for you.
Awesome. I love it. I love it. So, you have a doctor in front of your name for a reason. Not just because you want to be called the doctor because you're a rapper, but you actually were and are a dentist by trade, but have evolved a little bit from there. Can you tell me a little bit about that?
Yes, Howard. I graduated from New York University College of Dentistry and started a dental practice on Long Island in New York with a partner. And we built the practice up so that we had a staff of 15, and that included 4 dentists and 3 hygienists that worked for us. So in total, we had 9 producers of income. And because of that, it allowed us to work a 25-hour work week and still support our families comfortably. So I guess you could say that I had a pretty good gig going on there in Long Island. But what happened, Howard, was in the 1990s, I realized that at some point in time, I would need a passive form of income. And I really had no idea how to self invest. And it just wasn't in my DNA, Howard, to just hand my money over to somebody to invest for me. Not that there's anything wrong with it if you find the right person, but I just knew that that wasn't right for me. So I started teaching myself how to self invest both in stocks and in real estate. Now, I always had a little bit of a knack for math, so I started developing various rules and guidelines and formulas, equations, algorithms, spreadsheets, and so on for both. And I was doing pretty well right from the get-go in both arenas. Then what happened was in 2006, I was invited to speak before 250 real estate investors regarding some deals I was executing in Austin, Texas. Basically, taking one property that I owned in New York, converting it into 5 properties in Austin
Oh, wow.
without taking a penny out of my savings account. So that was the gist of my presentation. And I kind of fumbled through my first ever PowerPoint, and I made this presentation in front of 250 real estate investors. And I thought it was a pretty good presentation. But what happened was during that presentation, Howard, one sentence came out of my mouth that was about to change everything for me. I said that I purchased my first real estate investment property with the profits that I earned from selling stock options. Well, after the seminar was over, people were coming up to me asking me not about the real estate deal, but how do I sell stock options? So I'm kind of surprised by that. I'm talking real estate here, and an outstanding deal for me and my family for sure. And then I started getting emails and phone calls about it. So I said to my wife, Linda, maybe I should write a seminar, how I do covered call writing. So I wrote a very, very basic seminar. The woman who owned the real estate club was very generous and allowed me to send out an email blast to all of our members. She had hundreds and hundreds of members in this club. And I rented out a room in the local Holiday Inn and sold out. I couldn't
That's
believe it.
amazing.
So I said, you know what? Let me write. I wrote 3 more advanced seminars and sold out. And then I kept repeating the 4 series seminars and they kept selling out. I said, what's going on here? So at one point, I said to my wife, I said, I think I have enough here for a book. But I was always a math science guy. I didn't know if I could write a book. But Howard, every once in a while you get lucky. And here's how I got lucky. I mentioned to the woman who owned the real estate club that I was thinking of writing a book based on these seminars. And she said to me, Alan, I own a small publishing
Oh,
company.
wow.
I would love to publish a book. So every Friday, she'd come to my house. I'd take her out to dinner. We'd come back to the house, and I would I have a projector, and I would put my word file of everything that I wrote that week for this book. And she kind of guided me how to write a book. Use this font, use bullets here, use everything you really need to know about writing a book that I didn't know. And in January of 2007, Howard, my first book, Cashing Me In on Covered Calls, was published. They put it on Amazon, right? So 3 months later, the publisher calls me up and she says, Alan, are you sitting down? I go, what's up? She goes, your book is #1 on Amazon on options.
Wow.
And I couldn't believe it. And since then, I started getting invited to speak all over the country. My wife and I were in a different city pretty much every month, 10 to 12 presentations. We expanded those to little mini vacations and recently published my 9th book, and kind of the rest is history. But now getting back to the dental practice, as I got busier and busier with doing these presentations and writing more articles and doing more videos and writing more books, in 2011, it became apparent to me that I just couldn't do both anymore, even with working a 25-hour work week. So I gave my
Right.
partner 2.5 years notice that I'd be leaving in 13. That's pretty generous, right?
Yeah, not
He's
bad.
kind of
Not
like
bad.
he's like a brother to me. I just couldn't walk out on him. And so, Howard, that's the ideology of the blue collar investor because
That's
in 2013, I was devoting a lot of time to the blue collar investor, but in 13, I started devoting 100% of my time to BCI. And then I've had the good fortune to meet so many people, including all the Quasar people, including you, Howard. So I've been very, very fortunate to have 2 professional careers that I really enjoy quite a bit.
Yeah, I mean, and I do have your website up here for people to see. It's the bluecollarinvestor.com. And I will point out that I look at your stuff all the time, as you know, because when we talk about things, is your blog is amazing. So I do want to pull it up here so I can show it to our viewers. So many of these sites you have to pay to get any access, to get any information. They want your money before you get in. What you have is literally hundreds and hundreds of articles going through, again, your strategy, the BCI strategy, how to do it, different techniques within it. It's so comprehensive. It's just amazing. So I just wanted to quickly, before we got into our PowerPoint, bring this to people's attention because it just really does. And, all you got to do is start to look back and you find sort of whatever, as you know, I bought one of your books off the bat. I wanted to learn a little bit and, see, what it was about and so forth. And I bought your exit strategies, book. And what I've found is that that was a great starting point for me, but it's amazing the amount of information that you have on your website. And you guys, you and Barry and your team have done an amazing job of putting it together. I have to say, again, if you want to know about earnings reports, if you want to know about your calculators, you guys have it all done by your own tags. I mean, you see that like from Amazon. You don't normally see that on just a educator of options and trading. So it really is an impressive site. So I did want to say that before we got into your.
Thank, Thanks, Howard. Hey, could you stay on that page if you mind? I just show you
Sure.
viewers two things.
Yeah,
First of all, on the right side, you see a widget there for a presentation I'm going to be doing next week called the Collar Strategy.
I'm going to pull that up
So
right
if they
now.
click on that, they could register for that particular. If you scroll down, it's part of our continuing education webinars. It's 100% free. Just fill in that form that you're showing there, and you'll be sent the link the day before the webinar.
Oh, that's
And
amazing. I
the
mean, I
other
can
thing
tell
I
you,
want
you've gone over the collar strategy with me personally. I know how, what it is and how successful you can be with this strategy. And again, it's one of the things that I like to point out as we're on weekly is you took what started off as, what sounds sort of simple. I know it isn't simple to do covered calls, but, with sort of one technique, and you really evolved it into a life of its own. Like I said, I mean, you have 27 exit strategies that you put into place, and those are the things that I think that separate your program and what the BCI is versus even the other educators that I deal with at Quasar Markets. Is it isn't You have never rested on your laurels. We've talked about it a few times here. You look at every trade, you're meticulous. You always want to know what you could have maybe done better if you were in a trade, and even if it was successful, what could I have maybe done if I had done X, Y, or Z? Would it have made it more successful? So I do think
to.
that does separate you from many of the other educators we talk to.
Thanks, Howard. Could you mind going back to the blog
Yeah,
again? And I just want to show the viewers one more thing. Um, okay, if you scroll down on the right side, I think that's you guys right there. You see
yeah.
where it says subscribe to our free newsletter? I write an article every week. Again, it's a free newsletter. I put hours of work into this article. I don't just write two paragraphs goodbye. And I feel like I do my very best to make sure that there is a lot of educational content to these articles. So if any of your viewers aren't already receiving my newsletter, all you have to do is go to that blog link and fill in your name and email, and boom, you'll get it delivered to your email box at 10 a.m. Eastern Time every Sunday morning.
Yeah,
And
and I
like
get
I
it
said,
personally. I will tell you, I use it to get set up for my week. You put a lot of actionable information in there. It's not just a lot of fluff, like you said. You actually give real life examples. You tell people what you're seeing out there, and what you're doing personally. So, that's a change too from what you see in a lot of educators.
okay, thank you for bringing this page up, Howard.
No problem. Let's get a little bit into your presentation so far today.
Okay, well, I felt like talking about me isn't going to make anybody any money. So I thought that,
Maybe you might make you money. We can get some good sign-ups for you. Absolutely.
oh yeah, I just love what I do, and it's more or less a hobby for me. But I do have 5 people working for me. So yeah, I thought what I would do, Howard, if it's okay with you, is actually show you a real life trade
I love it.
taken from one of my recent portfolios, and show you how I kind of do this. And a lot of the rationale behind it is found probably in our previous 10 discussions. So this is just going to be kind of an overview, but I just want to give you viewers a feel for how a very typical traditional trade that I took from one of my portfolios. This one was a maximum return, so the most successful you could have had. Not
Okay.
all of them are like that, and there will be some losers interspersed there. But let me show you this one. When we do our trades, we base it on 3 skill sets, and I know I've said this before to you, Howard, but this is important. You must master the 3 skill sets of which underlying security are we going to use, stock or exchange traded fund. And the resources that I use are the same ones that we provide to our premium members. We have 3 reports. We have a stock report, which is published on the weekends. Then we have an exchange traded fund report published midweek every week. And then we have a monthly Dow 30 or blue chip report of the best performing Dow 30 stocks for those that want to just use blue chip companies. So I select mine from those very same reports that our members select from. Then it becomes okay, now we have the underlying of elite performers. What option am I going to use? What strike price am I going to use? In other words, for covered calls, what price am I going to agree to sell my shares for? In your case, with the ETF, my ETF, what expiration date am I going to use? And I've told you before that I use weeklies and monthlies, but I don't go further out than that because mainly two reasons. One, you get a better annualized return with shorter
Return.
dated options. And also, it helps us avoid earnings reports. ETFs, you don't have to worry about earnings reports because they don't give any, but for stocks, you do. And then finally, position management or exit strategies, which, as you know from the book you just alluded to, is a very, very big part of the BCI methodology, how we manage our trades, mitigate losses, turn losses into gains, and then enhance gains to even higher levels. So these are the skill sets, the education that we provide to our members, and the reports that will prevent you or not require you, let's say, to do your own screening. We do that for you.
Which is amazing. And I got to tell you, this is something that I think all of our viewers could really learn from. And when I say that is so many people are correct in their decision or in their thesis sometimes on what a stock might do. But what they don't understand is how the option selection work, how an option chain works, and how how the different Greeks fall into that, along with how liquid is the actual option that you're trading. And like you said, there can be a big difference on individual stocks or ETFs on whether it's a better deal to do a monthly or a weekly for your return based upon what your goals are. Um, and then the last part I can't stress enough is the position management part. I think separates you from everybody. Some people might be able to pick their selection. Some people might even be good enough to choose their own option chain, looking at an option chain. What separates you guys is providing all of this and making it in a way that even a beginner like myself was able to not feel overwhelmed. I think that's another part I wanted to bring up here is that this sounds very, very complicated. And it is very complicated. But you guys have taken a lot of the manual part of that and automized it. Like you said, you've literally developed algorithms that do this for you, the spreadsheets, all of that I'm sure we're going to get into.
Yeah, I think that it can be very intimidating because when you look at if you know very little or nothing about options and you look at this, it can be very intimidating. But then after you start doing it after a while, it becomes second nature. And I can't tell you how many thousands of members that have passed through or still with BCI at the beginning was scared to death to do options. And then the next thing you know, that's all they want to do is they
Yeah.
want to sell options in a low risk way. So give yourself 3 to 4 months, and I'm speaking to viewers in general who have little or no knowledge about this, to educate yourselves. Dip your toes in the water. Start off small. Start off, and then as you see how it works, and you get more confidence, and you see your portfolio net worth growing and growing, then you could start doing more and more until you find a level that's right for you. Now, you may not want to manage more than 10 positions, or maybe 25 is the right number for you. You'll find it, but you got to give yourself a little time, but you have to educate yourself first.
Absolutely. It's so important. We talk about it. I've seen it over the years when I worked for Prosper. There'd be so many students that would come to me and, look, how can I trade out of what I did, so to speak? It's a lot harder to advise people on the back end on how they can maybe fix a mistake when they should be doing the proper research and understanding what the parameters are. I mean, I've watched people get into broken wing butterflies and not know whether they wanted the stock to go up or down because somebody on the internet put a trade out there.
Yeah, yeah, yeah. Putting the trade out there is only the beginning. That's not the end of the education process. Anyone can enter a trade. It's and you don't just enter a trade and then pray. You enter a trade and you have to actively manage it. But a lot of times, Howard, you don't really have to do anything. I mean, the stock price may not go way up or way down. It may just kind of stay in a small channel throughout the course of that contract, maybe a weekly contract or a monthly contract. You may not have to do anything. But with covered calls, and we've talked about the 20%, 10% guidelines in the past, you
Yep.
could partially automate that exit strategy process in terms of preventing or mitigating if the price of the stock starts going down significantly. So that's something that's inherent in our material as well, is how to partially automate that exit strategy process.
Yep, absolutely. So I was speaking a little bit about your criteria, stock selection, and this is an example of one of your spreadsheets.
Yeah, this is from a stock report, which we start producing when the market closes 4 p.m. Eastern Time on Friday. My team usually finishes it about midnight Saturday night, and that's when it's uploaded to the premium member site. Now, these screens, when we talk screens for the individual stocks, we're talking about fundamental analysis, sales and earnings growth, technical analysis, identifying trend and momentum, and then some common sense principles like minimum trading volume, avoiding earnings reports, diversification, cash allocation. That all across the blue bar on the top. Those are the screening process we use, plus additional information. Like, for example, some members want to know if there's a dividend and what the yield is. So that you see in the middle of the screenshot there. Or are weekly options available? Well, how many weeks has it been on your report? That's a sign of strength. Or what's the ex-dividend date, the earnings date? So all that information is there. Now, you can go back to the next slide because that information I put in bullet point format. So for this Broadcom ticker symbol AVGO was one of the best performers when I made this particular screenshot, which is pretty recent.
Yep.
And at the time, it was trading at 170.47. It had been on our list for 2 weeks, and it was number 6 on the IBD Big Cap 20. So we use IBD screens. We have our own resources, BCI database. We use IBD 50, a few IBD screens as our starting points, but we also have our own database. This particular one was accessed from the IBD Big Cap 20. So of the stocks that have market caps of 10 billion or more, this was ranked number 6 in terms of fundamental and technical.
Okay.
Its implied volatility, how much it goes up and down, it was 39.8, which is robust. It's not like what your Bitcoin ETF is going to be,
Right.
but it's
But for most people,
robust.
40 is the right range to be in.
It's yeah, I'm very comfortable with something in this range, absolutely. And the report also tells you you're in the chips industry. So you don't want to be, let's say you have 10 positions, you don't want to have 8 in the chips industry. You
Right.
want to be well diversified. So the report allows you to see what industry segments that particular stock is in, and then it gives you the rank, the IBD rank of that industry, which in this case is B, which puts it in the 20 to 40% percentile. So that was good. Now, the MAR, or mean analyst rating, analysts get together, as most people know, and they rank a particular security. And then what they do is they take an average, a mean average of all of the analyst ratings, and they have a MAR, a figure that takes the rating, and in this particular case, it's 1.41. So to give you an idea, 1 is the absolute best, and
Right.
5 is the absolute worst. So 1.41 is excellent. All right, it's an average. It's an excellent average. So we're good there. Now, on balance volume, that's an institutional factor that we include in our reports, and it takes all the dollars that were traded in an up day and subtracts all the dollars traded in a down day and gives you it's going up, the trend is up, the trend is sideways, the trend is down. In this particular case, the trend was bullish. That's another positive signal. So there's no guarantee that Broadcom's going to go up in this contract. But as you can see, Howard, we're just throwing the odds more and more and more in our favor with
Absolutely.
every parameter that we're using. We also want to avoid earnings reports that we've talked about before, and the earnings report is 12.5, so it didn't interfere with this particular contract. Does it have dividends? Yes, the yield is 1.2%. And the X date, which you may or may not want to avoid, I don't, but some people do if they don't want their shares sold, was 9/19, which also didn't interfere in this contract. So here we go, Howard. The 175 monthly 1018 out of the money call higher than the price at the time that I executed the trade, which Broadcom was 170.47, at a
Yep.
bid price of 5.05, $5.05. Now, out of the money calls, I like to use as much as possible because it gives us the opportunity for two income streams per trade.
Right.
One from the option premium, in this case, $505 per contract. And second, from share appreciation from current market value, 170.47, up to but not beyond the out of the money call strike of 175. That's the reason that we should try to use out of the money as much as possible, although in the money becomes very important when there's a bear market or a volatile market or some kind of an event like an election or Brexit or Fed
Sure.
announcement that you're worried about. You may want to go in the money. So that's why I selected Broadcom, and that's the what I'm going to show you in the upcoming slide, what we put into our spreadsheet, 170.47 and the 175 strike at 505.
Absolutely. And like you said, what you're doing is you're making sure that it's hitting a broad spectrum of sort of thresholds that put it into play for you for your client, so to speak. It's not just, one thing. It outperformed the S&P. It's outperformed the S&P. It's showing up on this list. The analysts are saying the following. And then another important thing that you brought up in here that I want to talk about is diversity and diversification, not just from companies, but industries and segments. Very important that people sometimes, they own Nvidia, then they see something about Intel, so they buy Intel. Then they see something about AVGO, they buy that, and they feel that the diversification is good, but it really isn't, because if the chips get hit, they all get hit.
I've been looking at best performing stocks now for almost 30 years, and you'll find that a lot of them each week are in similar industries. So if you don't realize the importance of industry diversification in addition to stock diversification, then you may not be diversified, as you just
Right.
pointed out. And if that industry takes a hit, guess what happens to your portfolio? So, yeah, very important point you just brought up there, Howard.
Okay, so let's put in the initial
So,
trade calculations here.
yeah, here's our trade management calculator. I probably have this in almost every one of our discussions. I can't be without it. On the top row, you see the trade entries. Broadcom trading at 170.47, the 175 out of the money call, generated 505. I always put in 100 shares to simplify it when I'm doing presentations. Usually I'm selling 3 to 8 contracts for
Right.
each of my positions. I simplify it with 100. Now the bottom row shows what the spreadsheet gives us back after we make these entries. So circled in red on the bottom left, if taken through contract expiration, this is a 26-day trade. In the yellow cell, it gives us our break-even price point. And that break-even price point is 165.42, which is simply the price of the stock, 170.47 minus the 505. That's our break-even price point. So the meat and potatoes, though, of the spreadsheet is in the brown cells. And the brown
Right.
cells gives us our initial time value return. The 505, based on an investment of 17,047 per contract, is 2.96%. And based on a 26-day trade, that annualizes out to 41.59%. So you could see now that's our starting point, Howard. Our
Right.
ending point could be more or it could be more or less. And I want to highlight that to your viewers because I don't want them to get overly excited and think that this is a guaranteed result. It's our starting point. So that's in the brown cells, and I usually like to get a return of 2 to 4% a month as my starting point. So this fits right in there.
Yep.
Now, take a look at the bottom left cell, upside potential, 2.66. What that means is we could generate an additional 26-day return of 2.66% if Broadcom moves from 170.47 up to or beyond that 175 strike. So we have an opportunity here for a 26-day return of more than 5.5%. That would be our max return, which is actually what happened, as I'll show you in a minute. But
Okay.
it doesn't always happen, but it happened in this particular case. But this shows you your initial return and your max return, and then your break-even price point, because if Broadcom drops below 165.42, we could start to lose money, and that's when our exit strategy arsenal must kick in.
Okay. I have one other question I don't think I've asked before, but I realize now that I definitely should have. Do you figure in what you made in the premium for that? So in other words, I know 175 is the call strike, but in theory, right, it wouldn't get called away unless it hit 180.05 because it has to cover the cost of the premium. Am I correct there in that assumption?
It'll get it'll get called away if it's 175.01 or more on expiration Friday, unless we buy back the option prior to 4 p.m. Eastern time on expiration Friday. So it has to be only 1 penny or more higher than the strike price. Now, it won't always be exercised, but 99.9% of the time, it will be exercised.
Okay,
And
that's what I
also,
wasn't
the
sure
market.
because I had always taken in the premium into consideration there because someone paid me that already. They have to make that back for it to actually be a profitable trade for them.
No, there will be almost automatic, not always, but almost always
Okay.
automatic exercise at 175.01 or more. You'll log into your broker account on Saturday morning, and you'll say, "Hey, where'd my stock go?" And then you'll look in your cash account and you'll go, "Hey, where did all this money come from?" Yeah, it'll happen automatically. But if you
Okay.
don't want it to happen, buy back the option before
Absolutely,
expiration.
and we talked. I just wasn't sure. That's why I asked questions. I'm still learning.
Yeah, I'm happy to provide this information for you and your viewers. So just to summarize now, um, out of the money strikes have the advantage of the two income streams. In this case, 2.96% 26-day return, 41% annualized, and an additional 2.66% for upside potential. The high implied volatility, I wouldn't say high, the robust, let's say,
Right.
it's not ridiculous high. Robust implied volatility is the reason why we can get 2 to 4% in a 26-day trade. And then we put in our 20%, 10% guidelines that we talked about before, Howard, which is
Oops.
based on the 505. So you see on the last bullet, I put in a 20% buy to close limit order, good till cancel of $1.
Yep.
Where did I get that? It's 20% of 505.
505. Yep.
Now, with 2 weeks remaining in the contract, it becomes 10%. So I would put in 50 cents. So that goes in automatically. Now, if the stock price goes down to the point, and that brings the value of the option down. Now, we keep the 505 no matter what. Okay, let me get that
Yeah.
clear. We keep that no matter what. But if the price of Broadcom goes down, the value of that option will go down, and we could buy it back at a much lower price. So if we put that buy to close good till cancel limit order in, and the price of Broadcom drops, it didn't, but let's say it did, and it reaches the threshold, automatically the broker will execute that trade. Now we own
Right.
the shares. We have no longer an option obligation, and we could decide what to do. We could roll down, we could wait and resell the same option. If it goes back up, we could sell the shares. That's in the book that you purchased.
Yep.
What
Absolutely.
action to take and when. But yeah, that's an important aspect of the trade, is putting in that 20%, 10% buy to close limit order. That took me about 3 years to figure out back in the 90s. I'm figuring out different percentiles based on where we are in the contract. And for those of your viewers that are familiar with the option Greeks, that's based on theta, or time value erosion
Right.
of the premium.
Yep. Yeah. A couple of things that I looked at or I look at in here and that I think our viewers need to focus a little bit more in on. And that is one thing that you do really well because sometimes people don't get excited. Again, in the world of crypto, when I tell people to buy Bitcoin, they look at me, they roll their eyes, and they want to know about the next meme coin that has the possibility to do something. In the same way, when someone sees 2, 3%, 4%, they might not get excited until they look at the fact that that's a 26-day. And that's what really opened my eyes as I was looking at your sheet, was being able to see that and put that into relative terms for your yearly return, because I think that's important. Sometimes people go into these trades without understanding them, without fully, understanding all the components. And that's the biggest part, is that I've been impressed. Well, one of my biggest takeaways from the BCI is that you look at the cost or the value of holding that trade per day. And I love that as a concept. I think that it's important for people to realize that.
If you think back to your high school and college days of math, using an annualized return gives you a common denominator. So, for example, when people say, "Why did you annualize it? You don't know that you're going to get that return every month or every week or whatever." They said, "Well, you can then compare it to the CDs that you're getting or treasuries or whatever other investment modalities you're
Yeah.
using, and you can get an idea by that. Doesn't mean you're going to get it. You might get more. You might get more. You
Right,
might
but
get
it's
less. But
apples
that
to
is
apples, and that's not. People don't spend
yeah,
enough time
and
looking apples to apples. They try to compare the apple to the pear, and then wonder why that formula didn't work, or that trade scenario didn't work, or why it didn't fit in. I was talking with Steve earlier, and we were saying is, again, when I teach the 4-year-old, we put the square where the square goes, we put the circle where the circle goes, we put the star where the star goes. We don't try to bang the star into the circle, and sometimes people do that with trading techniques. So, that's why I wanted to point that out. I think it's important to know that. And then again, the second part is, it is just as important in my mind that you set the 2010 rule in place as it is choosing the correct stock. And what I mean by that is all of these things are set up to make you succeed. And if you leave parts and pieces out sometimes, you're not taking advantage and you're not really following the strategy in a way that it's going to be useful for you.
yeah, and that's for sure. And it's so easy to do. I mean, you buy the stock, you sell the option, you put in the buy to close good till cancel limit order. Takes like seconds, really.
Yep.
Then I put a note in the calendar, change 20 to 10, the weekend before the last 2 weeks of a monthly contract. If you're using weeklies, it's only 10%. But getting back to the other thing with the common denominator, just something came into my
Yep.
head. If you get, let's say, $1,000 return, right? Let's say over a year you make $1,000 doing a particular strategy. Well, that's okay if you invested $10,000, but if you invested $100,000 and you
Right.
got back 1,000, well, that you're not doing too well, right? So that's why getting an annualized return makes sense. At least it does to me, and our members appreciate the fact that our
Yeah. What
spreadsheet
you don't want to
will
do is
not
get
only
caught
give you
trying to pick up a penny in front of a steamroller.
yeah, right. Good way to put it.
Well, I've seen too many traders do that, because it's the same thing. And it's so funny because the same person that will do that is the same person. If you say, would you have bet $1,000 on Mike Tyson to beat so and so to make $10? Because they were that big of a favorite. No, I would never have done that. Well, that's what you sort of did, trying to do some of these techniques that I see, advertised and pushed on social media.
One other thing came to my mind, Howard. I hope you don't mind me keep putting these new things in, but
No.
a lot of retail investors or new investors to options will be enticed by the large premiums that later dated options give you. You can make $2 selling a monthly, but wait a minute, I could make $8 selling a leaps option that goes out a year and a half. $8 compared to two. But if you annualize it out, the $2 annualizes out to way more than the $8. So that's
Absolutely.
another reason to factor in annualizing your returns.
Yeah, that's what I said. Like I said, I thought it was great because it broke it down in a way that, like you said, it's apples to apples, and you're comparing it versus your other things. What am I earning in my money market or my CD or in whatever else you might be in? You want to be looking at things in the same way.
So what happened, Howard? On expiration Friday, Broadcom jumped up $5 a share. It was
Whoa.
already hovering around 175 strike, and it jumped all the way up and closed at 181.53. Because it had gone up so much in 26 days, I decided to allow exercise. I could have bought back the option, and it would have cost me, let's say, 653 plus a few pennies of time value, say 660 maybe. But I was a little concerned about maybe profit taking the following week because it had gone up so much. So I decided I'll allow exercise, and I made my more than 5.5% in 26 days. And
Wow.
then over the weekend, I made a decision as to where I was going to place the cash for my upcoming contracts on Monday, and that was based on the stock report that comes out over the weekend and the ETF report that came out the previous Wednesday.
And that's so important too. I've seen too many traders that get emotionally attached to a trade, although I guess I shouldn't say that since I just told you as we started that I'm going to use this on Bitcoin with the idea of not losing or having my shares exercised. But that's a little bit of a different thing, and it's a more for my retirement account on a certain thing. But yeah, I do think that that's so important because there are thousands of stocks, and there might not be thousands that fit your criteria for BTI, but there are thousands of stocks available to trade every day. Don't get tied in. Don't fall in love with a stock.
Very good advice. I have no loyalty whatsoever to any of my stock, none at all, because I've said this before, it's the cash we care about,
Yeah.
not the security that that cash is leveraging.
Right. That's where my Bitcoin, not to get off the subject, but where my Bitcoin comes in because to me, it's the Bitcoin standard, not the cash standard. My goal in life is to have the most Bitcoin I can have by the time I retire.
Okay, well, I wouldn't bet against you, Howard.
Okay, so let's finish up with our ending discussion here.
Okay, so this was an example of a winning trade. It had a max return. And not all winning trades will have a max return. So, for example, if Broadcom had gone up from 170 to, let's say, 173, you would have had two income streams. You would have had a premium of 505. You would have had another $3 or so in share value, unrealized unless you sold it. And so you would have had a really good return, just not a max return. You also could have a losing trade. If it dropped below the break-even price point and it couldn't be 100% mitigated with exit strategies, you could also have some losing trades. But here's the thing. If you've mastered those three required skill sets I alluded to before, stock selection, option selection, position management, you will have way more winning trades than losing trades. And the losers will be mitigated with exit strategies, and the winners will be enhanced with exit strategies. So you're constantly throwing the odds in your favor. So again, you might have some viewers that are watching this and learning about it for the first time and going, I love this. I'm starting tomorrow. Give
No.
yourself 3 or 4 months, educate yourself, dip your toes in the water, start small, don't start big, start small. And then as your portfolio net worth grows, start adding more and more positions, and then you'll be where I am in not that long of a period of time.
Yeah, again, and I want to stress what you just said, is it is an exciting, we talk it up when we do it, we get excited about it because we both have a passion for it, and for your strategy, but it is important to learn all of the little ins and outs that you need. You're not going to learn everything, but you want to know what your extra strategies are. You want to know how to look at that option chain. You want to understand the calculators involved and how to put the trades into your platform, whether you're using Thinkorswim or Robinhood or E-Trade, everything is a little bit different there. And again, I've seen too many people, unfortunately, in my time at Prosper who wouldn't take the time to learn the systems correctly before they enter the trade, and you don't want to put yourself in that position.
Yeah, I mean, you work hard for your money. You want to preserve it, you want it to grow, and you don't want to get lazy in the process of doing that.
Absolutely. Well, I want to thank you so much again for joining us on a weekly basis. And I wanted to take a little bit of a step back here as we started the new year, give people a new foundation sort of to talk about from the BCI strategy and get them excited like I am for what we have coming up over the upcoming weeks and months. So thank you so much, Dr. Ellman, for joining me, and have a fantastic week.
Much appreciated, Howard. Take care.